of this city, Mike Blaze, going into a couple things that are going to help us as we try to forecast and navigate the housing market. Exploring the cost of housing across the world is critical. We are a macro company, international. If there was land available on Mars, we would buy it. So we're going to give you a big picture on the overall market conditions from Shanghai, London, Australia, US. Obviously, we'll look at the four big cities here and then take a look at some of the prospects in South America. This is international news, meant to give you the big picture as we're international investors, as I think the world should be at this point in time with all the uncertainty. Our next topic will be the U.S. market housing data, supply versus demand. We go in depth and we look at the numbers. Our next topic will be the CDC moratorium. What does it mean for the U.S. market? We're going to take a peek there and understand that focal point. And then we'll look at the U.S. GDP and debt. Big question marks, big debt. Where are we headed? What do we got? We're just going to look at the data. No one can have a genie in the bottle in this time and with these affairs and this current condition, which is a big unknown. We're just going to let's look at the data and weekly go over what to do next, because that's how quick you're going to have to react when it happens, because it'll happen fast. Next thing is what to do next. Emerging trends I just mentioned. How do we do that? Looking at the data is all we can do. There's a lagger there, but at least we'll have some type of foresight on what we may see. Let's jump into the topics again. Build this city. You know how I do it. We like to look at the things just like I would look at it on the web, so you can also look for the data yourself. This is a key point in time to not be reliant on anyone to give you this information. Make sure that you're getting the data and researching it yourself, because your takeaways may be different from mine. Not a financial advisor. I'm a regular Joe like you or anybody else researching the data, and as a team, as a conglomerate, maybe we can come to some decision points. Now, as we look through the U.S. market, the first thing I want to look at is the housing numbers. I use Numbeo. This was last updated in October. One of the things that I like to see is mortgage as a percentage to income, 27%. I'm telling you, folks, even with the virus and the high job loss that we had in March, U.S. comparatively to other countries, we're still cheap. It is still the land of the havens. I'm telling you, if you really take a step back and you understand these markets, you start to understand how vital it is to have the world reserve currency. And U.S. is the world reserve currency at current state, even though we know these other factors are coming into play. We know about the crypto. We know about gold. Those are the silver, precious metals. Those are all coming into play because of the big debt burst that they expect. Research Weimar, Venezuela. They didn't have the reserve currency, but people think that inflation will burst our bubble. We shall see. So now, with those numbers, the average rent in the U.S. as a whole, $1,350. Okay, I'm not going into the cents here. That's for a one bedroom in the city center. That's not bad. We go to a one bedroom outside of the city center, it's about $1,081. So again, we're just looking at national numbers and understanding where are you currently at? Where's your mortgage at? Right? That could tell you where your mortgage should be as well. Three bedrooms, $2,171. $2,171 if you're within the city center. I know folks in New York and California are like, yeah, dream on. But hey, this is the national numbers as an aggregate combined. This is what we see. And outside of the city center, you're looking at $1,700. Okay. Net salary, all right, after tax, $3,548 is the average. Okay, and then mortgage interest rates, even though we've seen the lowest time in history, you know how the banks tack it on anyway. So the average rate right now, according to MBO, is 4.19. I like it because they use a number in totality. Now let's go look at some of the big dogs. Okay, we're gonna first step in to I really want to look at New York City, Mr. Manhattan himself, and play a visit there and see what they're doing from a housing perspective. As I step back in, And we look for Mr. Manhattan, Kansas. Okay, they got it as New York, New York. I hate when they do that, but I'm doing this. Yeah, I could have had it up already, but I want to show you guys how to short search. So here goes New York, New York. I searched that up, and look at that difference. That's why real estate is locale. If I looked at the whole number, real estate as a whole, 23% of income. So if you make $1,000 a month, making that up because it's easier for me to do the math. 20% of that, $200 would go to your rent if I looked at the overall number. Now let's take a step back at some other cities. New York City, 73% of your salary goes to your rent or mortgage. Let's step back again. As an aggregate, U.S. as a whole, 23% of your salary goes to your rent. New York City, almost 74%. Is there any reason why you're still in New York City if you have the opportunity to work offline somewhere else in another location where you have your laptop? I don't see a reason why. And let's go into the exodus in some other cities around the U.S. that may have similar numbers. This will be a long video, okay? Because I'm getting into all the stats. One of the outbursts that we're seeing from New York is folks that are jumping over to New Jersey. And a city of topic for me that I think a lot of people look at because it still gives you that New York feel. And I'm from New Jersey originally. Jersey City's so close, you might as well call it Little New York. And this is what happens. You jump across to Jersey City from having 74% of your income paying rent, you get down to 45% just by jumping over the bridge or going through the tunnel. I mean, is there any reason why there isn't a max exodus or folks are staying put where they're at in New Jersey and saying, perfect, I don't have to go into New York for work? This is it, folks. And some of the biggest beneficiaries, I'm going to start to take a look and just go into it. The city or state that I'm in now is Florida. I'm in the Tampa area. I love Miami. I used to live on the east coast of Florida as well, which was Melbourne. And that's another great area. Again, Florida has so many great spots. If there were mountains here, this would, bar none, kill off California, in my opinion. First of all, California doesn't even have 93 gas, but I'm not going to get into it there. You can tell I have a liking for cars. Tampa meets the national average. 23% of your income goes to your rent. So if you step back and you look at Jersey City, which is 45%, and New York City, which is 73%, which is ridiculous. If you just move to Tampa, you're at a 23%. I'm sure that Miami will give me another number. And again, teaching you guys how to search. You probably get it now. I'm just going to type in Miami to make life a little bit easier. There we go. Miami, Florida, and then we'll hit the other three big, I call it the four horsemen of the United States. Miami is 42%. You're telling me Miami is cheaper than Jersey City? Miami. Okay, that's huge. Of course, it's not Miami. Actually, Miami Beach also has some cheap real estate. Leave your info on the bottom. I can get you that if you're looking for that. So Miami is cheaper than freaking Jersey City. All right, let's go to the other side. Let's hit up Los Angeles. And actually, you know what? For goodness sakes, it's really, the talk has really been about San Francisco, right? So let's hit that up and see what that has to offer. Let's go to San Francisco and check that out. What do we got? San Francisco. Nope, there's doing a comparison. Los Alamos, New Mexico. Lord have mercy on me. Look at that price point. 12% of your income. I mean, somebody's really going to clean up house. So you don't want to go so far that you don't have a balance of anything. So again, let me get to San Francisco. And it should have been LA, but my thought process is, you know what? The tech valley's there, and they had some of the highest prices of real estate. Obviously, that should foil over into the rental segment. Let's see what they're doing there first, and then take a peek at California. Again, real-time data to give you a good understanding of what it takes to actually research this, because it's not just click and drop. I'm doing it for you here, but if you want to do it on your own, let's get there. 51% of your salary. Again, the high salaries there. So New York is just ridiculous, right? I mean, they are out of their minds, and Los Angeles is probably a similar story. So believe it or not, San Francisco is only 50% because of the high salaries of the tech guys out there. Let's get over to Los Angeles, and I'm going to get off this topic. A little bit too long, so here we go. Unbelievable. They do not have Los Angeles on here. That's interesting. Anyhow, so there she goes. So LA is 52%. So not bad when you look at the economies of scale on how much it costs to live. And then another guy we look at is Chicago. Again, I'm hitting the horsemen. And what I mean by that, I try to hit all coasts. So we looked at New Jersey, New York. It's high. It's in the upper above 40. We look down south in Florida. It's under 20%. I bet Atlanta's probably 18 or 19, and Texas is probably in the 30 range. Let's take a look at the Midwest, even though there's not a mass exodus there due to, obviously, the cold weather. No one wants to play ball there. Where's Chicago? Chicago's at 29%, which is higher than Florida. Okay, and that's a big city. And now we're going to do one more in the middle. Why don't we do a little bit of Dallas, Texas? Let's see what they're doing. Water is like the precious god of life. I mean, just nice cold water. Nothing's better than that. So as we jump into Dallas, Texas. %. If you want to talk about the worthwhileness of this video, I've just given you the numbers across multiple states. Dallas is cheaper than Tampa and Florida right now in some respects. 15% of your salary goes to rent. I tell you what, guys, interesting spot. Remember, there's white collar, blue collar jobs. If you look at the overall rent price, you're going to say it's $1,470. However, the income there in Dallas is a lot higher than what you see in places such as I don't really make it. Actually, the income in Dallas sometimes can be the same as New York, believe it or not. So that's the difference. Now, let's get into some international markets. Scary. China, Shanghai, 287%. Talk about a difference, right? You're talking about 50% crime. Look at Shanghai. Percentage of rent rent to income, or income to rent, 287%, which means it's unaffordable. Shanghai is unaffordable. That's crazy. That's China for you. So anyone talking about U.S. has it bad, China, God bless you. I mean, you'll be living literally in a shack. Let's look at Chengdu. Chengdu is a big market, really focused on 136% manufacturing. Chengdu, I'm probably saying it wrong, is 136%. Interesting. Let's keep doing drive-bys across different countries. Russia, 133%. I don't want to show you Moscow. It'll make you cry. Maybe do St. Petersburg in Russia. Really nice area. Let's get to St. Pete. St. Petersburg, Russia. Where are we at? 176%. Guys, let me bring it back into perspective on why America is probably one of the most prolific countries in history. It's right there. To live within St. Petersburg is 176% of your income. In the U.S., in the biggest city, one of the most known cities around the world, is 73%. And if you go to Los Angeles, it was in the 53 percentile based upon income data. I understand there are a lot of people that are not there and under that middle income, 60,000 and under, that are saying, "What the hell are you telling me? I'm struggling." I hear you. When you look at the total number, it is what it is. That's what it is, all right? So U.S. is still nice. France, 81%. That's more in line, right? France is at 81 percentile. We jump over to Australia. Let's look at Brisbane and beat that up real quick. I like Brisbane. That's a good number. Sydney's the main guy. That's a big dog. 43% in Brisbane. Maybe we try. Obviously, they're big. Where is she at? Not Dysart. The god darn. What's the darn capital of freaking Sydney, Australia. That was that hard, right? It's when you got so much stuff on your mind. Probably 70% out. Sydney's only 65%. So again, even though the numbers may look high from a rental perspective, when you look at the incomes, it's telling me 65% of your income goes into the rent. That's high. You don't want it to be there. 20% I think is maximum, but that's where they're at, and they're still cheaper than Shanghai, anything in China. All right, that is a real estate disaster. Let's keep going down. Venezuela, 16%. They were in turmoil, of course, so you know that this is accurate. Let's look at Valencia, a very rich town in Venezuela. Let's see what we got. No data. So we'll take the 16%. And then the last guy here is United Kingdom, and you can forget about it. 63%. United Kingdom, even with the pound loss, is still cheaper than freaking New York City or anything in Asia, Shanghai included. One guy I left out was Japan, but I'm going to leave it as such, okay? So after reviewing that, that's a good overall look at basically the housing numbers when you look at it from an affordability perspective. That kind of gives you the ratio. If you're over 60-something%, you got to ask yourself, is this sustainable, right? U.S. is in the 20s, historically been a little bit lower, but you got to ask yourself, is that sustainable, okay? The numbers are high, but still affordable. Let's jump into the next topic of discussion. We talked a little bit about, again, explore the cost of housing across the world. Now we're going to look at the U.S. market data, supply versus demand. And now we're going to go into my favorite site, the National Association of Realtors, and look at their numbers. So, boom, let's just kick this off, okay? From a sales perspective, this year, when we look at the October numbers, you can see that the Northwest has had a big decline in Northeast has had a big decline in sales overall, but they haven't been hit as hard as some of the other cities. And this is September data. As we dive in deeper, I'm going to get a little bit deeper in. The best market that was selling was actually, you would think it would be from the 250 to 500K range, but no, it is a massive rich buying call. I trade stocks, so call some puts. Bear with me if I start saying that quite a bit. They're buying it all up, and if you look at the Midwest, it's the same. They're getting money. The South, huge. If you're in the 750 to 1 million range, realtors selling in that range. God bless you. You're hitting a home run, ballpark run. West Coast, 50 to 74% in that 500 to 1 million range. All right, and then the U.S. overall, a big increase in luxury buying. Look at the scariest point of this. You thought that was high. Now look at the $1 million plus homes. 111% increase. This is nuts. Again, we talked about the COVID and its impact and people moving. I never thought I would see the higher end of homes without the tax breaks being bought up in droves. And that's what we're seeing. It's crazy. People are looking for sanctuaries at any cost, and they're certainly paying it we get the numbers here. Now, with all that being said, that leads us into the supply. And the supply numbers for September, horrible. If you're a buyer, God bless you, go to sleep. You're not getting a deal. 2.6% for anybody looking to buy. 2.6 months for anyone looking to try to buy. That means once it went on the market, it was sold, and it took about 2.5 months in general to get the deal done. So that is an incredible stat and something to keep your eye on as we move forward. All right, now we look at the overall data. Maybe this should have been a separate video, but we look at existing home sales. They're up. When we looked at that top end market, that is where we're seeing it. Median price of existing home sales, that is also up here. Okay. And then we got existing home sales median price percent change over year. Whew. Oh, September is hurting me. Almost 15% increase year over year with COVID. Could have been the pent up demand, like if I were to do the numbers, because you can see the big decline back in the February time frame. Is that what's making up for these high numbers here, and we'll see a decline? There is some pent up demand. We got to see if it's real or are people just hedging for a dollar collapse. That's another conversation. All right. Total existing home sales, again, up 20% in September. The market conditions, who's buying what? I'm looking for cash versus first-time home buyers using financing. You can see in the red that's September of 20, and this is 19. More home buyers were buying in 19. Sales to investors, that's 12 of 14. And then cash sales, believe it or not, are higher now than ever. Okay, they're trying to get in and out of the property, not finance, not have any debt. So that's pretty huge. And then we have the days on market, which is horrible, 21 to 32. And it's all about, what's going on with the COVID and the job situation. So don't really take too much to manage on that. Existing home sales, 43% went over to the south side. I mentioned New York is moving down. It makes sense. And in the housing supply we just looked at, and in the sales price we just looked at. So again, big numbers across the board for everybody. Big days for real estate agents if you're able to sell and get a property because there's such low inventory. So let's take a step back into the next topic as we look at the data. I wanted to get this tracker out here to let you know and have an understanding of what's actually hot in the market. The red indicates there's a shortage in housing supply and they need builders. The blue means you're fine. And if you look at the Northeast, New Jersey, New York have been hit tremendously. And they're telling me that's the time to go up and check that area out for some deals, because there may be some deals to be had. And then we look at Maryland as well. There goes Washington, D.C. All pink. Pink means, hey, need for more permits means there's a shortage in housing. Anything that's off red, orange, whatever, tells us there was a housing shortage and there needs support from builders who have to make this happen. Okay, so let's keep going over. Because it's getting a little bit stagnant, a little bit boring, because I'm giving you all these deadly numbers that really should just give you a broad picture. Now, as I look back in, right, how is it affecting the local economy? When I went through this, it just gave me percentages of GDP of what the housing industry brings to the Florida market, for example, and that is quite ridiculous. If you take a tally of the numbers again, let me zoom out a little bit. And what I just stated was 23% of GDP for Florida is real estate. North Carolina, I believe, was in the 15 percentile. California was in the 20%. You want to get under the teens. You don't want to rely on real estate, and I'll show you an example, to be your benefactor. Let's just jump over to California real quick to show you what I'm talking about. The total impact, right? The percentage of GDP, $648 billion in housing, 20.7% of that gross product. So when it goes out, there's a lot of problems with that economy in Florida since they're heavily reliant on it. So they're probably not going to be as bad as folks think. As we jump over to now the official data, the Fed data, the numbers that really tell you the story, let's step up in, right? Delinquency rates, all-time lows, forbearance. We know about that. Okay? Let's jump over to the affordability. We talked about that. It's an all-time, well, it's low. However, let's see if Khabib keeps fighting. I don't know. So, Khabib is a UFC fighter. I threw that in there. Will they keep fighting to try to bring this back up from an affordability perspective? Because right now, with the low interest rates and the high prices, the buyer remorse is there because the prices are going to be going down, and also the affordability, the availability, opportunity for somebody to buy these houses continues to wane and go in a downward direction. Here is perfect. Here is not so perfect. So just a heads up if you're looking at the data third person from the outside looking in. Same affordability index. Now we look at unemployment rate. Still a big spike. Still above where it needs to be. They need help here, and I hope somebody really starts to take a keen note on the unemployment rate, as it could be our demise. And that's something to look at as we look at the future forecast of possibly buying a home or getting something, is the fact that you're not going to be able to get it because of the unemployment rate and possibly not having a job, right? So there's going to be quite the bit of Armageddon as the debt comes to, oops, I skipped over because I'm leading you in. Here goes the gross domestic product is about, 20x, we got a trillion is what they have on there, 20,000 billion of the GDP, which is a pretty good number. But then you look at the debt. That's what I want to look at. Gross domestic, again, total public debt as percent of gross domestic product. Unsustainable, all-time highs, 135. I mean, phew, that is a tough storyline to follow and interesting as we look at the numbers. And we talked about the delinquency is low. We talked about the affordability index. And then we looked at the unemployment rate, which was bumping up well, then just went dead, right? Went dead, and with the COVID virus, and now it's trying to recover and get itself back in the right position. So at the end of the day, as we look at all the numbers in the data, it's a lot of conflicting issues due to government intervention. You've probably heard the story 10 times from 10 different channels, but it is what it is. It is government intervention that is preventing this to be what it's going to be. Let's get into some more data, articles, news. Foreigners buying of American real estate plunged, went down. So that is huge for the real estate market. There were some numbers that I pulled up that told us the amount of folks that were actually buying into real estate, and foreigners are a huge part of that investment. And it's saying to think that, international transactions mean nothing when you can see China spent about $15 billion on transactions in the year 2019. Canada's $9.5. Lo and behold, Mexico was $5.8 billion. Believe it or not, Colombia $1.3 billion. India $5.4 billion. A lot of folks parking their money still in the U.S. Again, this is 19 numbers, so 2019, we have to be cognizant of that as we look at the data. All right. Now we get into, and I skipped over, my apologies, a CDC moratorium on the different ways of not letting somebody get evicted. And the key part of that was to knock on the door essentially and ask the renter, hey, what are you doing? What's your situation? Are you planning on, try to feel them out? And the storyline is with the forbearance and the CDC magna cum laude action, it kept owners in a state of peril because they're not going to receive rent, and they would be in the same position as as the world turns because of COVID. So emergency ban on evictions and other protections related to coronavirus. You can see the laws here. I'll stick the link in there. The big ones that got hit, people got hit. I'm just going through the numbers, analyzing. District of Columbia, yes. All liberal states are kind of saying, you know what, let them be. I don't know if there's anything else that can be said for this data that it just tells us who's on hold and who isn't. If they're not on hold from an investment perspective, you got to be going to yourself, should I take a peek there and should I invest? That's a big question mark, something to look at as we continue to see the data. The big guys, District of Columbia is one, D.C., no evictions during state of emergency, okay, through December 31st. Florida, they took that off pretty early. That was October. And again, some other states, Hawaii is taking a break, Kansas. Again, some good information to tell you why you're not seeing any movement or large decrease in housing prices, even though in my particular area in Florida it has been going down. There goes some of the reasons why. All right. So to end this off with the trends, right, the summary of this, we looked at all the data. At this point in time, there's a government fix to keep this up. How long? '05 is when people started to see the tremors in the headlines of something going wrong. This particular data set, I would say, gives us a high level, but it's up to you to look at the locales and make sure everything was attached to plan. And that's the key vehicles. Make sure that you're analyzing the numbers and understanding what the output is and what your goals are, and you continue to try to hit that. That's the only thing you can do. So at this point in time, trend-wise, I advocate a multifaceted allocation of budget. I would say 20% crypto, 20% gold, 20% real estate, and 20% 20% general dividend stocks. And from there, the balance of 10%, that's just plain money. Try it if you want to, right? See if you can win that. Mess with it on the side, whatever. But in my opinion, you got to put your all into it to make sure that you get the result that you're expecting. So with all that said, build this city, real estate investments and stock, just general news on investments. I'm going to sign off a little bit long-winded, but I think we got a lot of information and know where we're headed. Build this city. Please like, subscribe, and share the channel. Appreciate you. Thank you.